Today I'd like to discuss a bit of underlying technology with you. If you are getting started with cryptocurrencies and you want to assess a project properly, you can hardly avoid immersing yourself in blockchain technology. We'll start with a bit of history, the origin of the internet. Let's get to it. We're going back to the creation of the internet, the first step of which started back in 1974 with the Ethernet, and some predecessors even earlier. The Ethernet made it possible to communicate between two computers. Later that same year came the protocol TCP/IP, where IP stands for Internet Protocol. Thanks to this protocol, several computers were enabled to talk to each other. Today's internet still has TCP/IP as its underlying protocol. The most well-known protocol on the internet is the HTTP protocol from 1990. Not even that long ago, if you think about it. HTTP stands for Hypertext Transport Protocol. Hypertext refers to the text containing connections, the links, and the transport protocol may speak for itself. In 1994, Pizza Hut had their first online ordering websites for their pizzas. The problem, however, was that it was not yet possible to pay online. No one had yet addressed the question, how do we transport value online? Online security is very important, that should be clear. When we communicate with our banks now, we make sure that our connection is secure. This is indicated in our browser with a lock. The technology behind this is SSL, Secure Socket Layer, and dates from 1996. PayPal first made it possible to make online payments in 1998. A trip to M-Pesa, widely used in Kenya, shows us that not only does our money have value, but also other digital resources. With M-Pesa, people pay, for example, with their call credit. So you see here that a digital unit, a minute on the phone or call credit, also represents value that can be exchanged digitally as means of payment. But despite this, the mystery remained. How do you transport value over the internet? And how do you do this between two people without the intervention of a bank or other central entity such as a company or intermediary? This is at the core of blockchain technology. This riddle was solved by Satoshi Nakamoto. On October 31st, 2008, he sent a message to a news group entitled Bitcoin, P2P eCash paper. It's unknown to this day who Satoshi Nakamoto is, but he is referred to as the inventor of Bitcoin. The message went on to say, I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party. The question that now arises is this a new internet protocol on top of the internet protocols we mentioned earlier? Bitcoin was not yet used as a payment mechanism for several months. On May 18, 2010, Laszlo Haniec asked who will deliver him 2 pizzas for 10,000 bitcoins. By doing so, he showed that with 10,000 bitcoins, valued at a measly $43.50, that Bitcoin is indeed a medium of value exchange, otherwise known as payment. After a quick calculation, today, on the 15th of April 2021, those 2 pizzas were worth $620 million. In doing so, he showed that someone was willing to deliver pizzas for 10,000 bitcoins and that Bitcoin had won the same trust as money has. Behind me, you see the official photo of Laszlo's child reaching out for the golden pizza. The data that moves over the decentralized network can therefore, in the case of Bitcoin, have value whilst simultaneously containing pieces of computer code. In the latter case, we refer to so-called smart contracts, a term that we'll most certainly return to later on. Smart contracts are in many cases part of the solution behind various cryptocurrency projects. At the moment, it's not entirely clear whether financial blockchain projects such as Bitcoin, Ripple, and Cardano can take over or support the financial system. There are certainly still some technical, commercial, and policy hurdles to be overcome. But for now, back to the question of what the underlying technology of Bitcoin actually is, this blockchain. The blockchain is a log to which you can add data. This data is timestamped from the moment of addition. This sequence of data blocks together forms a database. This database is secured by cryptography. Finally, it must be determined who may add a block next to the long row of blocks. There must be consensus, agreement about this. We've covered the three main building blocks of blockchain, namely the blocks themselves, cryptography, and the consensus mechanism. Let's look at the blocks. The blocks are linked together in a chain, hence blockchain. And each new block gets an encrypted part from the previous block. This is where the cryptography jumps into action. You can see this more clearly in the diagram behind me. Each block can contain numerous transactions, even up to 1 or 2,000. But how is it determined who may add the next block? Here's where the consensus mechanism comes into play. With Bitcoin, the consensus mechanism is proof of work, and this work is done by the miners. Bitcoins are thus mined just like gold, mined from a digital bit vein. So, Bitcoin's consensus mechanism works on the basis of proof of work. The miners have to solve a very difficult puzzle. The first to solve the puzzle receives a reward for this. This reward is paid out in the form of a Bitcoin. So when miners dig blocks, Bitcoins are occasionally released as a reward. These blocks are used in the blockchain. These blocks contain the transactions that are done on the network. The entire network of blocks, therefore, keeps an eye on all transactions. You can therefore conclude from this that the Bitcoin network operates without a third party, such as a bank, but is still remarkably safe. I have another wonderful source for you, where you can play around and discover how blockchain works, as well as test its security. The website can be found at www.anders.com/blockchain. The accompanying video that explains the process can be found in the description below. Your poor head may be spinning a little after all that tech, so I'll leave it here for today. However, I hope it interested you and that this is a starting point for your further discovery. This basic information provides you with sufficient knowledge that you can use during your own research into all sorts of cryptocurrency projects. And we're more than happy to dive into this and more next time. See you then!